Okay, good afternoon, everyone. Can I do a sound check? Do you hear me loud and clear? Put in the chat box, let me know. At least I know I'm not talking to myself. All right, thank you so much. Okay, so now it's 2:06. So usually we wait for a few minutes, let the rest come in, but we shall start on time, huh? Okay, so welcome to this tax planning mastery. Today is a preview, but however, it is not only a preview. I will be sharing with you a lot of stuff today where you immediately will benefit. Yeah. Okay. Now, before that, I would like to know you better, but of course, I won't ask you one by one to introduce, but I will just do a generic one. So, okay, can you scan this QR code and then join in the quiz later? Later, I will actually start the quiz later. So there will be a series of quiz and some surveys, polls as well. So this is the way that I run my training as well. So give you some time to scan the QR code. So you'll see something called Slido. So that is the platform that you will be using. Okay. Okay, let's start with the first one. So the first one, this is the first question. So at any point in time, you cannot scan in time. You can always scan the QR code on the top left-hand side. Huh? Okay, so this is live, so we are able to see where you're from. Okay, so I see that about 8 of you have responded. Any challenges, let me know. Okay, so about 50% of you is from independently owned FAs, 38% insurers, and Thai FA is 13%. Any other entries? No. Okay, let's go on. How about how many years have you got in the industry? How many years of financial advisory are you in this industry? Wow, so diversified. Three of you. Okay. Okay, let you key in your answers, your response. Okay, very good. So if you have been more than 10 years in this industry, then this course will be suitable for you because you are pretty established. So when you are established, then you will want to scale up your knowledge and your skills so that you can advise your clients better. We are no longer known as agents, insurance agents. We are known as financial advisors. So we need to have a well-rounded skill set. Okay. And we have minority 5 to 10 years, 2 to 5 years. Okay, so very good. As long as you are more than 2 years, this course will be suitable for you. Because if you are like maybe 0 to 2 years, right, it may be too new, still struggling with production. So may not be suitable. Okay, so you need to, this is like a more of a intermediate to advanced course. Okay, last question. Have you completed your CFP Module 3 or CHFC 03? This is all on either is tax planning or estate planning. Okay, so about half. Huh? Okay, so if you have passed, okay, if you have not passed, you haven't completed, haven't taken, then this course will actually help you to get started. At the same time, it also boosts your ability. Now, this is not a practical, this is not a theory class, because I do train students on this module 3. So this one is more practical whereby you will actually get to hands-on, okay, on all the skills. And you have taken already, for those who have completed module 3, right? Can you put in the chat box, have you practiced? That means have you given advice in the tax planning area already? Type in the chat box, let me know. That means you learn the theory, then do you advise or you use the knowledge? Yes, can put Y, no, can put N. No answer. Okay, no answer. I'll continue. Okay. Okay. So, introduction of myself. My name is Sean. Just call me Sean can already. So I'm a trainer, I'm a lecturer, I'm a consultant. So I'm not a armchair lecturer. So I'm still practicing. I do holistic financial planning for my clients. Okay. So you can connect me through LinkedIn if you like to. And for me, I have almost all the designation in the industry. So some people joke with me, I'm one of the most decorated financial consultant in Singapore. Okay. And I also train on, for example, the Singapore Accredited Mortgage Planner. I'm a trainer there as well. So that's why one of the area that I'll be covering will be the property. Okay, because almost all of us have a property each. So over the last few years, I'm also a two-time winner of the Financial Planning Awards. So this is not the so-called the typical MDRT top of table kind of thing. It's basically on the quality of advice. Okay, so this will give you confidence that I know what am I talking about. Okay, so not just theory. And of course, last year, actually, the industry actually launched a book called The Story of the Financial Advisory Industry. So I am one of the two person who is being invited to talk about the future. That means now going forward, the future, how are things going to be like? Okay. And of course, last year I was also invited in the conference where I would actually talk about the commission only model. I talk about the fee offset model. This is all the revenue streams that you can, as a financial consultant, you can actually go on. Okay. So I will also talk about fee base and also fee only. And lastly, the retainer, a yearly retainer. So for me, I actually operate on all five domains. Okay. So if you want to learn how to have a retainer, yearly retainer, some people thought that it's a AUM. Okay, it's not AUA or AUM. It's that the clients actually pay you a fee to retain you as their key financial consultant. Okay. So some clients actually opt for that. Sometimes clients don't. So for tax planning wise, you can actually do quite a lot of things. So you can actually expand uh, other than relying just on your commission, you can actually expand your scope. Yeah. Okay. So bottom line in summary, what are the advantages of tax planning as a financial consultant? It's not merely just do SRS or CPF top up. There are much more than that. Okay. There's three advantages. First one is that client positioning. So you are no longer positioning on just, oh, I'm a financial consultant. You can even say that you are tax planning specialist, like estate planning specialist. Okay. And of course, you can add value to your clients. Then number two is most importantly is to open more cases. Because with this skill set, you are able to open more cases. Okay. And of course, definitely what's the bottom line? You basically make more money lah. Okay. It's something that you like, right? Okay, you can respond in the chat box. Okay, so we will start. So for tax planning, okay, we need to understand what IRA's view is. Okay, there is this what we call a general anti-avoidance provision. Okay, that means to say whatever they say is correct okay, based on their guideline. Okay, so for us as financial consultant, we can always do tax planning. So IRA say, okay, all consumers, everybody can do tax planning, but you must make sure your tax planning, not only must it be legal, okay, it must also fulfill the intention of the income tax law. Okay, that is where a lot of people thought, oh, it's legal, I do law. Okay, but however, it will be illegal when you apply the income tax in. Okay, so for example, this particular case, so there was this dentist. Okay, so there was this dentist that he become very creative. So he know that when you set up a company, corporate income tax is actually lower than personal income tax. Okay. So he go and set up a company and then report accordingly. Okay. Unfortunately, that's the wrong thing to do. Number one, it's very legal to set up a company, no problem. Okay. But the problem is that the intention of the income tax rule, this allow him to do it in this way. Okay, so for example, us as financial consultant, we are not supposed to set up a company to receive a commission. Okay, especially when a commission is hundreds of thousands of dollars or more than 1 million, you're not supposed to set up a company because we are all what we call professionals. Okay, self-employed professionals. So we need to be aware of what's the difference. So even in the financial industry, this particular form, why is it called formal? Because once you gonna, then that's it already. Okay, you cannot be in the industry anymore. Okay, and this is another example. I don't know how can this happen now when you get 2 million commission, you don't declare. I also don't know why. Okay, so this one is also out part of tax planning. Okay, I'm not sure whether you are aware that this is a big news. Okay, the 99(1) loophole to pay ABSD. Okay, so I like to ask a question for all of you. Now back to your mobile phone. Is 99 to 1 a legitimate ownership arrangement? Can you tell me is no, yes, or depends? So if you like to join us, for those who are late, you can always scan the top left-hand side QR code to join in the quiz. So I'll let you key in all your answers. This is not live. I will click when you are done. Because you hear it from the news, you may not be familiar with this thing, okay? But it's actually part of tax planning, it's part of financial planning, okay? So as financial advisors, we are supposed to advise our clients anything got to do with money, okay, including property ownership. Okay, so 60% of you say yes, okay, it is legitimate, and about 1/3 of you say it depends, okay? So nobody say no, huh? Okay, so you all know, huh? Okay, because some people tell me it's a no, huh? So the answer is it depends, but usually it's a yes. Okay, unless to evade tax, then it's a no, lah. Okay, so that's where we really need to understand, hey, what is this thing about? Because your client may ask you, and then you need to prepare for your clients. Okay, especially now people start to buy more than one properties, huh? Okay, so for example, this is the one that is relating to the 99(1) case. Okay, so what happens? Okay, the thing is this. If ever lah, okay, if ever you are caught by IRAS, okay, if they invite you for coffee, okay, the thing to do is to wave your white flag, surrender, okay, because if you continue to double down on your lie, okay, finish, sure gonna charge one, okay. So this is one lesson learned. Okay, so the thing is that they actually so-called collaborate lah. Okay, mother and son collaborate lah. So whenever they find out IRAS, if ever find you, you better plead innocence. Okay, but innocence still not a defense. But at least you say, oh, I don't know, I'm sorry, apologize. What can you do? Then at least you won't go to jail. Okay, these two fellow went to jail. Okay, and this is a live real case. I had a client a few years ago. So he is actually a business owner, okay, own business. And he set up his business under LLP, Limited Liability Partnership. Okay. So this is one of the topic that we'll be sharing with you to understand what's the difference. So he actually went to CPF board, asked certain question. Okay. And then he went to IRAS and asked certain question. Okay. In the end, he cannot find the answer. Okay. Because CPF, they refer to IRAS, IRAS refer to CPF. So he also confused. And he feel that he's paying a lot of CPF. He actually do top up and do contribution, but he doesn't know how it works. And then it doesn't work the way he wants it. Okay. That's why to him, he's very confused. So he came to me and then I actually charged him a consultation fee. Okay, that means no other case. But of course, later become my clients and do other business. So charge for consultation, then I give him a report telling him all the nitty-gritty details. Okay. So that is where AI cannot replace us because we need to connect. Okay. Every time you do something in one area, it will affect another area. Okay. This is something that, for example, you do some buy a property, then do tax planning, and then it will actually affect your estate planning as well. Okay, which we'll actually touch on maybe a little bit later. Okay. So I will share with you under two segments today. Okay, the first segment is what we call your business level. So as financial consultant, I assume that most of you are self-employed. Okay, that is where we see our gross revenue, and then we need to determine what is our eligible business expenses. Okay, and over the last 20 over years, right, when I started in the industry, right, until today, there are still a lot of myths in the financial industry on how to report income tax. Okay, still got myths. Even the supervisor don't know. Okay, so that's where today you have some glimpse of it, very clear, so that you know how to declare. Okay, okay. So this is the first common practical question. So for example, you go and meet your client, business meeting, then you order 2 drinks, okay, whether coffee bean or whatever. Then you go to one for your client, one for yourself. Can you tell me how do you account for business expenses? So this back to your phone again. Can participate, let me know. So if you don't know, then just put what you have been declaring. Okay. How have you been declaring or claiming your business expenses? So the first one is only if a sale was made. Number 2 is client portion only. Both, otherwise you won't be there because you are prospecting. It is part of your business. So if not convenient for your phone, you can always key in the chat box using your mobile phone. Then you can participate so that I know whether you are declaring correct or not. Okay, let's see. Okay, so okay, lucky you all come to this class. Okay. A lot of you say both lah. Otherwise, I go there for what? You're prospecting what? And only a sale is made, then it's considered expense. The correct answer is that you can only claim the client's portion. Okay, that is the correct answer. Okay. So so you need to know when you buy drinks, buy food, okay, maybe you go there, go for lunch appointment, then you got let's say maybe one of you order steak, one of you order spaghetti. So I don't think the IRAS will ask, go and interview your client who eat what lah. Okay, so you get what I mean. Okay, steak and spaghetti different price. Okay, so this is the first one, very practical. Now the second one, if you go and prospect, entertain a potential client, can you claim business expense if she or she did not become your client? That means prospect remain prospect but never become your client. Or suspect become prospect but never become your client. Or prospect become suspect. So how do you claim? Okay, so most of you say is yes, you actually claim. The correct answer is actually no. You cannot claim. Okay. So this one not I say one, this one is Ira say one. So that's cannot, because one of the, okay, the reason is because that particular prospect did not become our client and did not produce business revenue. So when this particular client did not give you business revenue, then you cannot claim as a business expense. Okay, so in the course we will actually explain much more and then tell you which was like lawyer like that. Okay, next one. This one, this is the myth that always perpetuate in the industry one. Okay, especially the insurance industry, or even the property industry also. When declaring business expenses, can you just assume a certain percentage? Like for example, some people will say, oh, as long as you don't declare certain, not more than certain percentage of your income, you are okay. Can or cannot? Yes, no, or depends. How have you been declaring? You take percentage or what? If you take percentage means yes lah. Okay. Wow, some of you smart already. You think that the answer is depends on. Okay. So one third depends, one third yes, one third no. All right. Okay, the answer is actually it depends. Okay. As a best practice, you are supposed to keep all your records. But there is only one exception. Okay. That exception came in year of assessment 2020, about 5 years ago, where the government say, okay, if let's say your gross commission, okay, is 50,000 and below, okay, then you can use what we call a fixed expense deduction ratio. This is the only exception. If you earn $50,001, you can no longer use this percentage. So the percentage only for the lower income one. One of the reasons why this came in because of a lot of freelancer, like for example, Grab drivers and all this. So they want to make it simple. Okay. So this one applies to all self-employed. Okay. As long as 50,000 and below, yes, you can use percentage. Anything above, you cannot. Okay. So that's the only exception. So one of the things that we cover in the course, we will also cover things like GST. Okay. So when is GST? Because you might, okay, so one of the thing about tax planning is that when you know about tax planning, you'll be able to advise your clients on the difference between sole proprietorship, LLP, private limited, and how to optimize in the tax area. Okay, so that they will appreciate your advice more. And then when to actually report GST, what's the necessity? Okay, so all these things will be covered in the course. Okay, because there are a lot of small business owners actually do not know how to actually declare accordingly. Okay, so that's why, like for example, this is also 2020. The first man, okay, first person who actually failed to register for GST because he was selling handphones, sell mobile phone online. Okay, and actually the gross revenue exceed 1 million, and it is a requirement. Okay, it's compulsory to register for GST. So he actually didn't register as a GST entity. So even for financial advisors, okay, so maybe some of you here, you may be what we call a GST registered person. That means your commission actually exceeds 1 million. Okay, then you need to register GST. Okay. Even durian seller, Asing durian is one of my favorite durian, durian store because the quality is very reliable. Okay, so unfortunately, this happened to them. Okay, they actually, I think okay, they actually under declare their business income, and then they actually fail to register for GST for some time. Okay, so I think they roughly think that they can escape lah. Okay, but the GST, I think it was ignorance. The income one, that one, I think they do it knowingly one. Okay, so if let's say you know that IRAS actually have this reporting of tax evasion or fraud. Okay, that means actually IRAS actually pay you money to report somebody. Okay, so I think somebody report asking durian. Okay, they actually give you this reward lah. Okay, and that means let's say next time you very jealous of your colleague and he or she earn a lot then you don't like him you suspect never declare income tax, so you to him or her, then you get some reward if ever they are caught. Okay, so this is where we want to protect ourselves. We want to make sure that we understand the tax properly. Then we will not become a victim. Okay, especially when your income is very high. And also we also study the GST relief limits. Okay, when you travel overseas, go shopping. I know some of you go shopping, go here, go Europe, tour, shop bags, all these things. Come back. So there's a certain amount that is so-called granted GST relief, and the relief is not a lot. Okay, especially when you buy shopping a lot. Okay. So this particular person, this is actually a Taiwan celebrity, actually share the unpleasant experience. Okay, on this particular thing. The bag was very new. Okay, so they actually charge him GST for that. Okay. Okay, practical question again. So assuming that you are a blogger or influencer or your client is, and then you are invited to do a review for a seafood restaurant, okay? And the owner didn't pay you any money, no cash, no voucher, only sponsor the food and drink for your dinner, for your seafood dinner, okay? Can you tell me, right, how would you advise your client? Is this even taxable? Yes, no, depends. Type in the chat box or your phone. Because now a lot of profession, right? What we call micro influencer, micro blogger. That means they are not as famous as then you need to advise them. Then at least you can actually tell them. Okay. Okay, so only 20% of you say yes. Okay, so the answer is actually yes. Okay, because income does not need to be cash. Income can be perks and benefit in kind. Okay, it can come in the form of let's say free rental, your hotel stay, that sponsored you. All these are actually taxable. Okay, so uh, similar to you, a lot of people also don't know. Okay, in the early days, okay, the IRAS tell everyone, okay, please declare your sponsored items. Okay, and of course they object lah. Okay, a lot of protest because they don't know the income tax law. Okay, so they protest. Then they say social influence because that time things a lot of influencer come in. For example, the Xia Xue, if you know her, sponsorship, all these things. Okay, so of course there are certain guidelines as well. Certain things there is an exception. Okay, so in the course, those are the things that we will actually go into in depth, whereby we will let you know what are the things to declare, what are the things no need to declare, so that your blogger clients, okay, your influencer clients know how to declare, okay, without going into those some trouble. So that is on business, okay, as a self-employed business, give you a glimpse of it. So as a business, you can be a business owner, self-employed, professional, it will apply. Okay. If you understand the structure of private limited, there's also an application for that because they have their own kind of tax reduction strategies that you need to be familiar with. Okay. Then the second segment, second area that I want to touch with you today is basically the personal level. Okay. So you are a professional and then you got business. After that, it boils down to your personal level. So personal level, you have more control because sometimes business not much control. I mean, expenses is expenses. Can claim means can claim, cannot means cannot already. But for your own personal one, you have some control. Okay, you have some power over it. Okay, so I give you an example. Okay, so this is a typical self-employed. Gross trade income is 150,000. He got a home loan of 500,000 and a car loan of 80,000. Okay, so this is quite typical lah. Okay, like for example, a property agent can be this income level. If he do nothing, that means never seek financial planning advice, tax planning advice, he will be paying about 11,000 of tax. Okay, that means he just put the CPF, MediSave contribution, compulsory one, never do anything. He will be paying 11,000. But if let's say he do tax planning, okay, he will be only be paying $2,000. He saved actually $9,000. Okay, that is a reduction of about 79%. Okay, and guess when you help your clients to save 9,000, where does the 9,000 go to? Go to your pocket lah. That's your budget extra case for your investment, insurance, ILP or whatever case. Because if your client actually invests this 9,000 of savings at let's say 5%, okay, over a period of 20 years, he will be creating a tax-free income of close to 300,000. So that is the impact of tax planning. You are actually helping your clients to create extra wealth, okay, by reducing their tax. Okay, and that's where you get your premium from, like your budget from, to plan other things like retirement planning. Okay. Now, very important question. Can you let me know, have you opened an SRS account or have you made any contribution yet? So if you have not both, then it's no, no. If you are open already but haven't made any contribution before, then it's a yes, no. If you have done both, then it's a yes, yes. What is your answer? Okay, so as financial consultant, I'm happy to see that the 50% is yes, yes. Okay. Now, okay, because some of you may not know what is even an SRS. It is important to know this, okay, because all of your answers should be yes, yes. Okay, there's a reason for this. The reason is because it is relating to the retirement age. Okay, I wish I meet you before 2022. Okay, because otherwise, the retirement age will be 62. Okay, it has now changed to 63. And it will eventually go to 65. That's the official retirement age in Singapore. Okay. And the government has already announced by next year, July 2026, it will be raised to 64. So what has this got to do with SRS? Okay. The reason is this. The earliest SRS withdrawal age is actually based on your first contribution into your SRS, and depending on that year, when is the retirement age? So for those of you who have actually done it already, you actually before that you open the account, you put in $1, put in $7, or your lucky number 8, you put $8. That is considered your first contribution. Then you will have choked your SRS withdrawal age. That means it's the earliest time. Unlike CPF, right? CPF, you need to depend on what CPF say. Okay. But this one you can choke. Okay. At this time, that is the you can say that's a hack lah. Okay, you want to choke first. Today, your income may not be high enough to utilize SRS. But in future, your income get higher, or some of you, maybe you're a working mother, but one day your children will grow up, then you will no longer have working mother child relief. You will likely need SRS to reduce your tax. Okay, so that is where you need to actually not only do it for yourself and go and educate all your clients that please go and do this first before the earliest withdrawal age increase, the retirement age increase. Okay, because right 2 years ago something changed. Not 2 years. Last year something changed. The working mother child relief changed. Okay, but before that, can I check with you? In your experience, for a married couple with 2 children, okay, you can type in the chat box, let me know. Is the qualifying child relief usually claimed by husband or wife? Or you don't do any form of this kind of advice at all? Let me know in the chat box if you have. Okay, Desmond say is wife. Okay, usually claimed by wife. Okay, that's interesting. Okay, B. Thank you, Desmond. Any other answers? Okay, before 2024. Okay, uh, because the wife, the mother, usually have working mother child relief, and usually it's by a percentage. So if let's say assuming the income the same, usually qualifying child relief is claimed by the husband because husband don't have working father child relief. Okay. So we have to use the qualifying child relief, and especially when the husband income is higher than the wife, then you will need the qualifying child relief to be under the husband. Okay. However, things have changed. Okay, not say things have changed. Things will change going forward because the working mother child relief have changed from a percentage to a fixed figure, which means to say going forward, right? Most working mothers with 2 children would have to do SRS. Because last time, before that, most mothers with the percentage alone will have maximized the cap of the personal relief cap of 80,000 already. But because of this change, going forward, because instead of a percentage for high income mothers, they have changed to an absolute figure. Okay, which means to say in going forward in future, eventually even the mothers will need to actually use SRS. Okay. Other than of course CPF things. So this is where we need to cover as well. Okay. And the third area is regarding property. Now, most Singaporeans at least have, I would say, at least have one property lah, HDB lah. Okay, and increasingly a lot of clients are uh, do something called property planning. Okay, so this is actually relating to tax planning. So sometimes when I say, oh, I do tax planning and property planning is relating to tax as well. Okay, and we'll be able to advise things like property tax and also rental income as well. So I'm not sure whether you're aware. I think earlier this year the residential property tax rate have increased. Okay, especially for those that is for investment purpose that generate rental income. Okay, so this question is asked by one of my clients. I'm not sure whether your client asked you this question. Okay, so he said that because they actually do something called decoupling. So decoupling is something that we discussed in the course also. They actually decouple. So one of them, the husband, actually stay in property A. Then the wife stay in property B. That means not rented out, both not rented out. They say they stay in one each lah. Okay. So the question is that are the owner occupied rates allowed to be applied on both property? Because when you occupy the property, you are the owner occupier, the tax rate is certain percent. But if it is non-owner occupied, it's another certain percent. Okay, it's actually higher lah if you rent out for property. Okay, so the question to you is that can it be applied for both properties? Okay, through your phone, let me know, or the chat box, or not sure. That means each of them own one each. Okay, you're not sure, huh? Okay, so the answer is no, because the government also know lah, you this kind of pattern. Okay, you stay in one, your wife stay in one, although you own one each, but practically because you by virtue of marriage, you can only declare one as owner occupied. The other one has to be non-owner occupied. That means assuming it's for investment. Okay, so that's maybe your clients may ask you. Okay. Now, as for rental expenses, okay, there are two kinds of rental that you can actually use. So this is where you need to understand how to help your clients declare income tax on rental expenses. Okay, whether it's the method 1 or method 2. Method 1 is what we call the deemed expenses. The other method 2 is using the actual expenses. So the deemed expenses will be using a straightforward 15%, either one. Okay. But on top of the 15%, actually property owners, property investors are able to claim from the mortgage interest. Okay, because when you pay a mortgage installment, there's two portions. One is the principal, the other one is the interest. So every year, your clients should go to the bank and ask for a statement. Okay, ask for the statement so that the bank will tell you how much have you paid interest on that particular property. And then that is your eligible rental expenses on top of the 15% deemed. Okay, so is to let your clients know. But of course, sometimes you need to really calculate properly. Because that day I just spoke to my client, 15% seems a lot, but sometimes the maintenance cost of the property is already $1,000 per month. So $1,000 per month versus 5,000 rental income, that's like already 20% already. So sometimes it's actually better to use the actual one. Okay. So this a little bit of tips for you. Maybe you have a rental property, huh? Okay. Now, so that is on rental income and also property tax. Now, another thing that is also more prevalent is things like ABSD. Okay, stands for Additional Buyer Stamp Duty. Okay, so I'm not sure whether you are aware nowadays, even for Singapore citizen, if you buy a second residential property, you'll be slapped with 20% extra buyer stamp duty, which means to say if you buy the second property, if it is deemed to be your second ownership, then if the property is 1 million, okay, then you need to pay 200,000 tax on top of the usual buyer stamp duty. Okay, very heavy, right? Okay, so that is one of the reasons why a lot of owners, okay, they are now trying to plan long term now. Okay, really, for financial planning, they plan long term. Okay, so we will be doing something called property hacking. Okay, especially for couples buying the first property, whether they should buy jointly. Okay, see, when you buy jointly, right, then the next one you buy, sure, is second property already. But there is also other options to own the HDB. Even for your first HDB, BTO, there's a way to own it one. Okay, we by so-called property hacking. Okay, and whether people should do condo, okay, 99.1 or 91.9, okay, or 90.10, whatever percentage. And we'll also be discussing things like decoupling, okay, the technical decoupling to reduce your potential tax and ABSD. Okay. So I think this is the last question. Okay. Uh, Profits through the buying and selling of real estate are considered capital gains. Hence, they are not taxable. Can you let me know whether the answer is true, false, depends, or accountant and IRAS will decide? This one is like common generic wisdom. Okay, the answer is it depends. Okay. So a lot of people say is yeah lah, capital gain, there's no capital gains tax in Singapore. Okay. So the answer is actually it depends. If let's say you are deemed to be trading in properties, okay, that means you are actually buying and selling quite frequently, and your purpose is for capital gain, then your gains may be taxable. So this is one of the things that we will be discussing. Okay. Where we'll be discussing, there will be some cases that is actually put through the courts already to determine, hey, what do you mean by that? Okay, why like that one? Okay, I thought there's no capital gains tax, but actually there is if you are deemed to be so-called what we call property trading in property. Okay, so in this short 15 minutes, I'm sharing some tips. So I believe you learned something. Okay, but of course, we'll be running a one-day one. Okay, so the benefits will be number one, we'll be covering the breadth and the depth. Okay, not just a theory. That means not just one area on income tax planning, but many areas, including property, businesses, and things like that, and also enough depth so that you can actually advise your clients. Secondly, we'll be using a lot of case studies and a lot of examples, okay, to actually examine. And most importantly, you will have the practical advisory tools to advise your clients, okay, which is actually provided actually most of them is provided by IRAS, okay, but the thing is how to use them appropriately, Okay, but remember that we are doing tax planning. We are not tax consultant. We are not giving tax advice. Please be careful. But we can always do tax planning. Okay. So this cost, this 1 day cost, the amount, the original usual price is 1,005. But because we have gotten funding for you guys, okay, we have gotten funding of 50 to 70% depending on your age. If you are 40 and above, then 70% funding from IBF. If only 50, then it's only half price. And if you are a NTUC member, okay, actually, if you haven't, you can go and be a member lah. Okay, just apply the membership. You can even get another 50% funding. So if you're 40 and above, get $500. This one is per year. Then if you're below 40, it's $250. So you actually your outflow is not a lot lah. And not only that, it is also fully funded, can be fully funded using your skills future credit. If you haven't used your $500, you can actually use it as well. So you can use all three lah. Okay, can use all three. If not, then you use whatever that you can use. Okay, for example, NTUC member you can use, but definitely the IBF one, that one confirm you will get. Okay. So if you register and sign up for the 1 day course, I'll give you 3 bonus. The first bonus is that you will get a book, a complimentary copy of the physical book. Okay, where you can actually learn from the 3 veterans, okay, in the industry. And I will also provide a one-time post-workshop consultation. Let's say if you have a case, you do not know how to handle or you have questions, I give you 1 year. Okay, you can always consult me. We can work on the case together. And the third one is that if you ever need me to handhold you, okay, we can do something called co-broke. Okay, co-broke means we share commission. So you pay tuition fee lah. Okay, I go with you, I deliver everything, but it will be case by case basis. Okay, if it's very complex, I can handle. If it's not so complex, I will give you the confidence. At least you can handle yourself. Okay. Okay. If there are any questions, you can type in the chat box. Let me know. Then I'll try to answer. Okay, so Veronica asks, is there another one? Yes, there is. So just let us know, then we will send you the next one because likely I will be doing another preview and then we will actually announce the next date. The tentative date is actually December, but I may bring forward depending on the situation. Okay, so the next coming intake is exactly 1 month later. That is 26th of September. Exactly 1 month, and it's all online. You no need to travel. So we'll be communicating through Zoom, and then we will have more dialogue, okay, more time to actually discuss, okay, all the cases that you may have or you're working on. You want to open case or close case, okay? Okay, any other questions before we close? So you can register by scanning the QR code, then you can enroll. It's quite long, you need to enroll yourself properly. Okay, so Irene asked a question. If there's a refund of purchase, will the GST paid be refunded? This one is regarding tax planning or regarding the cost. Okay, I'm not sure. So context is very important, okay, especially in tax planning. The cost, okay, that means if yeah, so Kyra answered cost no GST, no GST, no GST yet lah. Okay, there's no GST, so you save 9% already. So the 1,005 is net lah. Okay, the national GST. So you cut take away the funding 50 to 70% also. Okay, Irene, if let's say you are a GST registered person, okay, if you are a GST registered person, that means your revenue exceed 1 million and you are actually registered under IRAS as a GST person, all the expenses that you paid, as long as there's a GST component, you can actually claim back. Okay, if you are lah. If you're not, then you cannot claim back lah. If this is tax planning question.
Hi, Sean.
Hi.
I'm just asking because there's a course that was cancelled and it was they are refunding me the money.
Uh-huh.
But then because I also paid with the GST. Yes.
Uh-huh.
So would they also need to refund me the GST, or the GST is already paid up and can't be refunded?
Oh, I see. It should be able to claim back.
Oh, okay.
Yeah, you
Yeah.
should get back from them lah.
Okay. Thanks.
Yeah.
Thanks for the
Yeah,
advice.
they won't jampu lah because when you are GST registered entity, you are supposed to report your GST obligation every 3 months to IRAS. So they can actually refund back to you, then they claim back from the IRAS again.
Oh,
Yeah,
okay. Can
should be
okay.
like that lah.
Okay. Thank
Yeah,
you.
okay, you're welcome. Okay, so we shall end here. Any question, you can always contact us through the QR code. Okay, goodbye.